Hello everyone, you are the future chartered accountants of India. We have discussed, we have completed two chapters of direct taxations. In this chapter, in this video, we are going to start the third chapter, which is categorized as under A category because it is very important. Income from salary. There are five heads of income. Income from salary, income from house property, income from PG, that is profit and gains from business and professional, and capital gain. Last one is income from other sources. Now we are going to discuss the first heads of income, that is income from salary. Okay. Now without wasting further time, first the gentle reminder, if you are not subscribed yet, please subscribe to my YouTube channel. This is Abhijith Acharya welcoming all for today's Abhi CA classes. Welcoming all for today's classes. Okay. First, section 15 of Income Tax Act 1961 says that it's a charging section. It says that income is taxable under the head salary if there is a employer and employee relationship. There should be a master and servant relationship between master and servant. For example, if I am a lecturer in any particular organizations, I am receiving a professional income. There is no employee-employee relationship. Then my fees will not be charged under head income from salary. Okay. If I am having, for example, I am a doctor, I am having a clinic, then there will not be, there will actually there is no employer-employee relationship, right? In that case, fees received by me is not chargeable under income from salary. Income from salary means if I am a doctor serving in one of the organization, one of the medical institution, receiving a salary, and there is an employer-employee relationship, there is a master and service relationship, then only that income will be charged in the hands of that doctor under the head salary. Okay. Next, salary is taxable even in case of part-time job like employee, like the employee may work with the two employers simultaneously. In the morning from under one employee, in the evening under some employee, actually another employee. Both both income is taxed under the head income from salary. But the point is there should be employer-employee relationship. There should be master and servant relationships. Okay. Next, salary is taxable on the basis of due or received, whichever is earlier. For example, uh, if I am having actually if I receive the salary of February month in this month only, then the February month salary will be taxed in the hands of January. For example, in simple terms, April month's salary I have received in the month of March, then that April month salary is also taxable in the hands of March. The received or due concept, whichever is earlier. Due means which is not yet been received by us, but is taxable. For example, March month ka salary you have not yet received in the months of March, but also it should be treated as it's a salary of March. Okay, this is a simple concept. Sorry. Next, salary received by partner from partnership firm, partner of the partnership firm, then shall not be taxable under the head of salary. It will be taxable under the head of the PGBP, that is profit and gains from business or profession, because it's a type of business income. Okay, keep it in my mind. It may be asked in your MCQ part. A salary received by MP, MLA, MLC shall be taxed under the head IFOS, because there is no employee-employee relationship between the government and that MP or MLA, and hence it will be taxed under the head IFOS, that is income from other sources. Okay, this is a basic concept. Next, one is the most important note. If you work for contract of services, there is a contract of services, that is that any income will be charged under the head salary. If there is a contract for services, then that income will be charged under the PGBP, that is business income. Contract of services will be treated as salary. Contract for services will be treated as PGBP, that is business income. Okay. Next, salary foregone. I will not accept my salary, like that only. If this is a simple concept. Actually, I do not need my salary. That is called salary foregone. Is always taxable because it is merely an application of income. Salary surrendered to central government shall not be taxed as a salary. Salary foregone. I do not want my salary. Is treated as application of income. That meaning we have discussed in the first basic chapter, and it will be taxed, but salary surrendered, okay, to central government is not to be treated as salary. Okay, next, any amount received before joining employment, like a bonus, joining bonus will be there, or after the session of employment, like a VRS or gratuity, some other guys, that is also be part of your salary, will be charged under the salary only. And also it will be it will be combinedly, it will be called in combined as profit in lieu of salary, so it is always be taxed under the head salary only. Next, section 9 subsection 1 subclause 3, already we have discussed the same concept in chapter 2. The salary payable by government of India to a citizen of India for services rendered outside India shall be deemed to be accrued in India. Okay, and however, individual SSE who are not the citizen of India are entitled to following exemption. In above, actually, we have discussed in chapter number 2, salary payable by government of India for the persons for services rendered outside India will be charged in his hand only. It will be treated as deemed to be accrued in India. But if he is a non-citizen of India, then following exemptions will be availed. Following exemption will be given to that person. For example, government of India pays a salary to a non-resident on behalf of Indian government for services rendered out of India. Then the following exemption will be given. Okay. Section 10, subsection 6, subclause 2, remuneration received by foreign diplomats, consulate, and their staff will be exempt under section 10, subsection 6, subclause 2 to pay the income tax amount to the government. But the condition should be following two conditions should be satisfied. Number one, a remuneration received by our corresponding government officials. For example, Indian government officials is serving in another country, for example, USA. For them also, that amount should be exempt. For if there is exempt for our government officials in that country, then for their officials, we'll grant the exemption. That's it. Okay. Next, the condition, the above mentioned official should not be engaged in any other business, profession or employment in India. Those foreign diplomats, foreign government officials should not be engaged in any of the business activity, any of the professional activity, any of the employment in India. Then only that remuneration received by the foreign diplomats in India will be exempt. Okay, the two following conditions should be satisfied. Next, remuneration received for services rendered by him as an employee of a foreign enterprise during his stay in India. Any of the foreign enterprise is there. Let's assume MNC company. For their employee staff is working for services, they are rendering any services in India, then the remuneration received is also not taxed in the hands of them. Okay, the following conditions should be satisfied. First, the foreign enterprise, that foreign MNC company is there, should not engage in any other business in India. That MNC company should not have any branches, any of the business trading, they are not containing any of the activities in India. Then only that remuneration received by that their staff in India will not be taxed. Okay. Next, his stay, that individual stay in India does not exceed 90 days. In the previous year 22-23, he should be staying in India within 90 days. That's it. 90 days, okay. Does not exceed 90 days, greater than 90 days, okay. Next, such remuneration is not liable to be deducted from the employer's income under chargeable, because that TDS will not be deducted. If the TDS is deducted, then that remuneration will be taxed. If the TDS is not deducted, the tax is not deducted for such a income, then that remuneration part will be exempt. Okay, simple. Next, section 10, subsection 6, clause 8. Salary received by non-citizen of India and non-resident of India for services rendered in connection with employment on foreign ship. Foreign ship is there. For them, that NR or non-resident is working, is exempt in India only if his stay in India does not exceed 90 days. Foreign ship is coming to India, and that person is a crew member who is a non-resident, non-citizen of India, then he should stay in India only for up to 90 days, then the remuneration is salary received by him is not to be taxed in India, even though it is received in India. Okay, simple. Next, section 10(6) subclause 9. Remuneration received by employees of foreign government from their respective government during their stay in India is exempt if such a remuneration is connected with the specified training in an establishment which is undertaken by. I will once again explain. Remuneration received by employees of foreign government ka employees from their respective government, okay, their during their stay in India with respect to some specified training which is undertaken by our government of India. I will once again explain. Remuneration received by employees of government from their respective government. Okay, during their stay in India is exempt. The training is provided by our government company, our government, and our companies. Our means Indian company, Indian government, for which the remuneration is received by their government. Okay, then that is also will be exempt. But the condition is that training should be given. That training should be undertaken only by government of India. Any company wholly specified, only owned by CG, that is central government, state government, and or both, and any company which is subsidiary of a company referred above, that is above the list. Next, any statutory corporation, then any society registered under Societies Registration Act 1860, which is wholly financed by CG, SG, and both. Okay, remuneration received by government, other foreign government employees from their respective government during their stay in India is exempt only if the training is specified by the following these category. Then will be that the exempt will be given. This is one amendment brought in this financial year, so keep it in mind. Okay. Next, we will see the statement of salary. First, basic salary. Note number will. I have mentioned the note number 1, 2, 3. So we will discuss one by one the DA, commission, dearness allowance, in short, DA. This is a part of your salary. It is a part. It forms a part of your salary. Okay, it's commission, bonus, advance salary or arrears of salary, gratuity, pension, leave salary, allowances, provident fund, voluntary retirement compensation, superannuation fund, retrenchment fund, perquisites, and if you add all of these, then you will arrive at a gross salary. Then you have to deduct the deduction under section 16. We'll discuss one by one. Don't worry. Professional tax is entertainment allowances, standard deductions. Okay. Then if you deduct this amount from gross salary, you will arrive at a net salary, which is taxable. Okay. This is the final salary. Okay. Next, first note number 1, basic salary. It will be, you will see the salary statement. If your mom or dad is working in some organizations, they will be arriving at form 16. In that first part is will be basic salary. Okay, it is fully taxable. Okay, next note number 2, dearness allowance. There will be a part of dearness allowances. In short, we will call it as DA. Okay, DA is fully taxable. If it is fully taxable, if it is in terms or not in terms, there will be mention called DA in bracket. They will call in terms or bracket in called not in terms. What do you mean by these in terms and non in terms? DA in terms means DA is a forming part of your retirement benefit. Retirement benefit means gratuity or pension. Okay. DA wherever the DA in terms means it will be part of your the retirement benefit. While computing that gratuity, you will be in a you will see that DA in terms. You will see in the next the slide. Okay, that's retirement benefit. In all the formulas, DA is considered only if it in terms. Formulas means in the gratuity computation, in a pension computation, if we have to take a DA only if it is specified in the question that DA in terms or DA may form the part of your retirement benefit. If that word is that sentence is given, then only we will consider that DA for the computation of that gratuity. But DA means it will be taxed. Okay, for the computation of that gratuity pension, DA we have to take only if they have mentioned in the question that it will be part of your retirement benefit or it will be DA in terms. Okay, if nothing is mentioned in the question, then we assume that it is not in terms, then we will exclude that DA from the computation of for the computation of for that gratuity and pension or some other areas. Okay, where there is mention, then we have to take. Where there is no mention in the questions, there is then we have to exclude that DA. But DA should be part of your salary. Okay, first basic, next DA. But that DA should be taken into consideration for the computation of that gratuity only if it is given in the question that it is part of your retirement benefit or DA in terms. If nothing is mentioned, we have to exclude. Okay. Next, 3, commission. It is fully taxable, where it is a turnover commission or any other commission. Simple. Next, bonus, taxable on receipt basis. For example, in question, if only declared bonus is mentioned, then we have to exclude. Only if it is given that the bonus is received, bonus is paid by the company, then only we have to consider in the salary computation. Okay, only if it is not due basis, it is a receipt basis. Okay, but salary is taxable on the due or receipt, whichever is higher. But bonus, wherever bonus is there, we have to ensure that it is a receipt basis. Okay, where one is declared is mentioned or only bonus accrue is mentioned, we should ignore. Okay. Next, advance salary or arrears of salary. Advance salary means taxable on the receipt basis. Okay. Next, if advance against the salary is given or only advance is given in the question, then we should treat it as a loan. We should not take it as an income, because advance against salary means for against your salary, the company is going to give a loan. That's called employees loan. Employees loan. Okay. Staff loan, it's in simple. Then it should be ignored. Okay, we should not take it as an income because it's obviously not income, right? Next, arrears of salary. Arrears of salary means arrears under dispute or in increase of salary retrospectively. For example, 2005 or 6 ka salary will be has been enhanced, and that enhanced portion has been received in this previous year. For example, it might be possible, it might be common in, it will be common in the government employees or state government employees, or because there will be a dispute, there will be dispute in the payment of taxes, payment of the salary, then that dispute is resolved, then that excess salary will be paid in the current previous year, then that is called arrears of salary. The salary will had not been received at that point of time, but has been received in this financial year, then it should be taxed in the year in which it is received, because we don't know at what point of time it will be received, right? So it will be taxed in the hands of SSC only at the time of receipt basis, only on the time of receipt. Okay. Next, there will be a concept, so there will be a relief also given to them under section 89. We'll discuss at that point at the last part of this chapter. Okay. Next, note number 6. That I have considered already discussed gratuity. Received during the employment, it will be taxed for all employees. All employees, government employees also, non other than government employees also, it will be taxed during the employment. After employment, that is at the time of retirement, then that exemption under section 10(10) will be allowed. Okay, first government employees, we'll see the government employee. The government employee is receiving gratuity at the time of retirement, then it is fully exempt. For other employees, there will be again 2 classification. First one, if that employees is covered under POGA. POGA means Payment of Gratuity Act in 1972. That employee is been covered under the POGA, that is POGA Act 1972. Then the exemption will be as follows. First one, exempt portion. 15 divided by 26 into salary per month into number of years of completion of services. Let's say, for example, 32 years. Round off is allowed. Round off means if an employee is other than a government employee served in an organization for 32.7 years, 32 years and 7 months, then we should be take it as 33 years. Okay. 15 by 26 into salary per month into number of years of completion of services, 33 years in this case. Or actual gratuity received, or statutory limit 20 lakh, whichever is less. This is the concept. And actually initially I have discussed that the income tax government allows only when there is a less if the following categories are there, some of the categories, whichever is lower will be treated as our government of India. So 15 by 26 into salary per month into number of years of completion rounded off is allowed. Okay, remember that. And actual gratuity received and statutory limit of 20 lakh. There is a slab of 20 lakh. For example, if a gratuity received first two categories exceeding that 20 lakh, there should be limited. It should be cut off to 20 lakh only. Okay, that's a limit. But salary means what in the first category? Salary means the latest basic salary per month. The latest, at the time of retirement is now the latest salary per month that should be taken plus DA both. DA both means BA in terms also plus DA non in terms also. Okay, we should take here. Also, and hence we have considered both here. If it is a part of your retirement benefits also, if it is not a part of your retirement, we should take the DA. Then that portion will be treated as salary into 15 by 26 into number of years of completion of services. Okay. Then if that employee is not covered under POGA Act, that is the Payment of Gratuity Act 1972, then the exemption portion will be the lower of the following. First one, half into average salary per month. Average salary per month. In that case, salary per month. Here, average salary per month into number of years of completion of services. But remember, a round off is not allowed. In that case, 32.7 should be treated as 32 years. 7 months ho gaya, loss. Because he is not covered under POGA Act, right? And hence, half into average salary per month into number of years of completion of services. Round off is not allowed. Or actual gratuity received or statutory limit of 20 lakh, whichever is lower. What is average salary per month? Average salary per month means excluding the salary of retirement. Let's say I am retiring in January month. I should exclude the January month ka salary. I should take only the last 10 salary, because average salary means excluding this month, past month. Average basic salary of last 10 months. That means December, November, October, September, August, July, June, May, April, March. We should take 10 months divided by 10. 10 months ka salary divided by 10. That will be average basic salary. Plus DAT. DAT means only in terms. Only where there is mention of retirement benefit, then that portion should be taken. For example, 100 rupees is a DA. Out of that 50% is a DAT. That is in terms. So then we should take 50 rupees only. But 100 rupees will be taxed in the above statement of salary. Okay. Average re-up of the last 10 months plus average turnover commission of the last 10 months. There will be a turnover. The commission will also be given, paid to the employees on the basis of their turnover of their company. On that, turnover commission should be taken on the basis of average months. So we should add, then it will become an average salary. Average salary into half into number of years of completion of services. In that, round off is not allowed. In the first case, round off is allowed. In the first case, salary means DA both plus basic. In this, salary means average of 10 months basic plus DA only T plus turnover commission. In that, 15 by 26 we have to do. In this, half we have to do. Okay. Super. Next, pension. Pension, there will be two cases. Uncommitted pension. Uncommitted pension means monthly pension. That will be taxed for all the employees. Next category is commuted pension. That is lump sum pension. We will apply for lump sum pension. We want a lump sum pension in one shot. In that case, the exemption under section 10, subsection 10A will be given. Okay. It will be classified into two. First, uncommitted pension will be taxed for both government employees as well as non-government employees. For government employees, the committed pension fully exempt. Jai. Okay. For other employees, the exemption will be treated as if the employees in the receipt of gratuity also received, then the exempt portion will be total pension into 1 by 3. 1 by 3 means 33.33%. Where he is not receiving the gratuity amount, then the exempt portion will be total pension into half only. Half means 50%. First case, he will be receiving only exempt to the extent of 33%. If the gratuity if he is a non-gratuity person, employee, then the exempt term will be 50% of the total pension. Why there is the discrimination is between there? Because if the employee is in the receipt of gratuity, then it will be covered under first category, POGA Act. For POGA Act, the number of years of completion services round off is also given. The higher benefit is given in that for those the gratuity employee, right, as compared to non-gratuity employee. Okay, and hence the higher benefit is already given to them. So we'll give the higher benefit in now with regard to that pension exemption as 50%. If he is in receipt of gratuity, it will be covered in POGA Act, and hence a round of method will be given. That is 33 years. And hence for him 33.3313 also should be given as an exemption for the pension income. For gratuity is not received person category, half 50% only will be treated as total of the pension will be treated as exempt. Total pension means full pension. It's full mother full pension. Okay. Next, note number 8, leave salary. It is also called encashment of salary. If you have an excess salary, actually excess leave, you there will be option in some of the companies. You can encash your excess leave. Okay, to some extent. Leave encashment during employment. If you encash your that leave during the employment, then it will be taxed for government employees as well as non-government employees. If you encash your leave at the time of your retirement, then for government employee J, because fully exempt. For non-government employees, the following exemption will be given. 10 subsection 10 AA. Okay. List of the following. Leave credit. We'll discuss what you mean leave credit. Leave credit into average salary per month. What do you mean by leave credit? I have mentioned here. Leave allowed minus leave taken. For example, in a year you will be given 30 days. Okay, but you have taken 15 days. Difference is only 15. 15 leaves you can be encashed, but only 15 days not. 15 days in a year, but how many days, how many years you have served in that company? Let's say for example 10 years you have survived. You have served, okay. 10 into 15, 150 is a leave credit. Okay, understood? But that leave credit should be converted into number of months. Okay, divided by 30 you have to make. 150 divided by 30, that is comes to 5 is a credit. Okay, that's a leave credit. Understood, right? Simple. Next, that leave credit into average salary per month. Here different is the definition salary. Average salary per month means average of last 10 months salary up to the date of year, up to the date of retirement is mentioned. For example, in the above example, we have excluded January month salary. But for calculating this average employment for average salary for leave encashment, we should include the January month salary also. January, December, like so on. Okay, up to last 10 months. Okay, next basic salary plus average DA in terms. In terms is only both is given only at the kind of POGA Act only. Okay, in the last month plus average turnover commission of the last 10 months. If you add all these, if you multiply that amounts of the leave credit means allowed minus taken into number of years of service, that should be divided into 30 days, that should be converted into number of days. Okay, how it is, so 30, so it should be converted into number of month. Okay, 1 month contains 30 days, 150 divided by 30 will be arriving as the leave credit. Okay, multiply by average salary. Next, I think it might be a very difficult, but over a practice it will be easy. Okay, next 10 months into average salary per month. 10 into average salary per month. Next, actual amount received as an encashment, or there's a statutory limit of 3 lakh, whichever is lower. For government employees, fully exempt. For other employees, leave credit into average salary per month. 10 months into average salary per month. Actually amount received, or statutory limit of 3 lakh. That's that one point to be kept in mind, that that maximum 30 days for every completed day should be taken. In any company, there might be a chance of sanctioning a leave of 35 days. Then we should take not 35 days, we should take only 30 days. It is a maximum cap. Minus a leave availed into number of years of services, that should be converted into number of months. How? Divided by 30 you can give, because 1 month equal to 30 days. Then how many days it will be there? Divided by 30. Then we will be divided the leave credit. Okay. till now we have discussed the first part of this salary chapter, because we'll discuss the other chapter, other parts in upcoming videos very soon. Till then, revise this concept thoroughly. Revise. If you revise over and over again, then it will be stuck in your mind. It will be helpful for your examination day, also exam day also. So we revise it all and have a nice day. This is Abhijith Acharya signing off. Abhi CA Classes. Have a nice day. Bye bye.